to rip it off, on day trading. In my practice account today I bought some options, because it's a new option for the next month. So we're in July, but the options closed I think yesterday. I'd closed mine the day before. So you buy now, you buy your options for the next month, if you do monthly options. So I bought mine, I bought over 6,000 options in a tech stock, which is leveraged and all, it's leveraged. Margin and all that, risky. If there is background noise, you have to ignore it. Can't do anything about it. And then, so I bought the options for the next 30 days. I think they're going to go like that, right? But the short sellers must have gone straight away, bought the put. I buy option call, which is that way. Short sellers buy option put, which goes that way, where they make money when it goes down. And the options, 6,000 odd options, the price went down by about 44%. Because I was making, it's the short sellers that are doing it, short sellers. And so I was trying to make money going up, and they just short it straight away. And it's short, but I don't know, but basically I went down to my balance was 44% down within about an hour and a half. But most people, and it went down to, you got the availability. If you're losing money, your availability is what your balance then takes when it's losing money. It will take money from your available balance, your equity. You got your margin and your profit and loss, and you got your available, and your balance will absorb the loss from the available, which will drain the available to keep your trading balance open, your trading account open. Otherwise, it busts the balance. And mine went right down from. I had about 44%, 45, but about 45%, 50ish liquidity in my available. But because I went down, maybe because my balance went down, it absorbed the available, which took me available down to 0.000 pence. Was it? Oh, nothing, yeah. And it hovered. It would have actually given me like a margin call, but it didn't. At that point, you think, now do I change from option put, option call, which is making money on it when it goes up, to switch to option put, which means it makes, if I'd have changed from my option call to, and then changed to option put, I would have then scrapped my option call, which was making money on the way up, to then having no available, because it sucked the available to absorb the 44% loss. So what I would have done then would have changed it and lost money by changing it to a put, which means that it was going to go down further. But I did nothing. I did absolutely nothing, and it came back from 44% down, and it came up, and it's now down about what's it down by? It's down by 14%, 15%, which is nothing when it was 44% down. We're about to bust the balance. That's day trading in a practice account, but it's day trading for real as well. But that's my so basically I bought my trades for the month, which is just one stock, one tech stock. I won't say which one it was, because I'm still in it now. Probably for another 30 days or whenever I decide to take it, close the trade. But it's going to have to go on the background because it's talking and all that. So I was close. Sometimes it's just best to ride it's like the deep wave. Yeah. Sometimes it's just best to ride the wave and hope. And I rode the wave, the financial wave, and the stock just come back So now I could lose another 30% tomorrow, and I would still be in my. And I've left it overnight with no stop loss on the trade. So tomorrow it could open down 30-40%. If the short sellers start shorting it, it could quite easily plummet and bust the balance. But that's what I'm prepared to. I don't think it will, so I've left it open with no stop loss. So basically, if it gaps up, I make some money. If it gaps down, I lose some money. I'm in a practice account, day trading, but this is what I could have been down 44% and bust balance today, but fortunately the stock market decided it wasn't going to. It was right down the bottom, and it was like, come back up. That's it. That's day trading for you. But if I'd have put a stop loss on there, I'd have stopped. It would have stopped me out. The trade would have closed, stopped me out, kept me in profit, but I would have been a few grand down. But I wouldn't. It would have stopped my trade from going. It would have stopped it here, yeah. So I would never have got down to here, but I would never have got back up the other side. I would have had to trade my way out of wherever I might have put a stop loss. So sometimes stop losses, yes, they stop the loss, but they also stop the profit.